Good morning. Welcome to Options Center. I want to do a quick update for members here to show you what I'm looking at now that the extra bearish scenario is no longer valid. Today we gapped up and negated the bearish, and we thought it would, but we wanted to get that out of the way so we can take that off the table. And now we're looking at two scenarios. Most people are kind of looking at a new low coming in as being an option. I don't think so. I don't think a lower high is in the cards here. And I think it's because of what QQQ has showed us. I put out a video a few days ago about the Qs, and you can watch that if you want more detail. But I think we're going to start to fill out this wedge. Okay, we have two wedges. I'll show you SPY and QQQ to show you what my scenarios are. There's two scenarios to the upside. One is making a high above this high here, and the alternate scenario is making a new all-time high. I don't think we're going to make new all-time highs, especially if this wedge holds. I think we might get really deep and consider it a double top or so, at least on SPY. Okay, so in both of these scenarios, you can make a lower high in SPY, and you can count this as 1, 2, 3, 4, 5, but the Qs have to make a new high above here. Have to. There's no choice. The structure doesn't work out so well because this is a higher time frame correction. It's a major correction that we're having here, and with new all-time highs, that doesn't change the scenario for the bears. Make new all-time highs, and then we just look to start over this bear market scenario. But with the timing, the reason why I don't think we make a new all-time high, there's actually several reasons, but timing with the Fed pausing, the timing of when they started rate hikes, time is really most important. And I think the only thing that changes that time frame is if the Fed has to raise hikes even more. And I'm not going to go too far into that. It's all about the Fed. Fundamentals that's not really what my channel is all about, but this is really about timing. And I do think this high is good. So with that said, if we're not going down and we're not going to make new all-time highs, my primary scenario would be just to eke out a new high here. And now if this channel holds and we make a lower high on SPX, we just have to make, and I'll show you Qs, and then we'll go through the charts in a little bit more depth, at least SPY. And since this is so bullish, if we make a new high on the Qs before we make a new high on SPX or SPY, I do think that's a valid situation as well. But with this being the shortest, this wave 3, you can't have an impulse wave. Therefore, I don't think we make a lower high in the Qs. And if we somehow did make a lower high, that means that's much more bullish for the market. What do I mean by that? We have this initial move here, and if we're correcting with an A, B, and a C lower, that's telling me this is more like a 1, 2, and we continue much higher. So I don't think that fits. I don't think that fits what's going on in the world. The whole soft landing talk and all this stuff, that it just doesn't fit with the inverted yield curve. All these things happening, that's not the scenario. Okay, so where do we go from here then? On Qs, just so I can show you, I think we make a lower high, but we make a higher high here, but we make a lower high here, but the same thing fits. You see how the wedge rises a little bit steeper than SPY? If we happen to make it a brand new all-time high in the Qs and then make a lower high on SPY, that fits the scenario as well. So I'm not focusing on the Qs except for the tea leaf it gave us that this is a corrective move. And so I think we make new highs here. So with that said, we have to focus a lot more on SPY because the market in itself, I don't think makes new all-time highs. Qs, I don't care if it does or not, but somehow this is going to make a lower high than the 2022 high. Okay, so on a near-term basis, we have our consolidation areas. We have a downtrend line here, and we have a neckline from the head and shoulders that played out perfectly into the lower area here. So I'm going to adjust this line just a little bit so I hit the end of the tail here. So what I'm looking for is a pullback. We have Powell here today. Powell's going to speak at noon in an hour here, Eastern Standard Time. We're at resistance. If this pops while he's talking, I do think it reverses at minimum or at the latest tomorrow. Okay, so with that said, where do we go when we reverse? I do think we reverse, and you know, anything can happen. We can just continue to just keep going higher. It just doesn't really fit any of my scenarios, really. So with the lower high, all the indicators are saying we're near a top here. With the lower high, you have on the pullback, you have the 200-day moving average, and it coincides with this pivot and the gap. Okay, that might give us a little bounce there, but I do think this is going to be a little bit deeper, and I think that's going to be a scare. So at the lowest possible point, we'll have to see. We'll have to see how price action goes. We're looking for a three wave correction. This is an impulse, 3-wave correction, and possibly it goes all the way down to test this new trend line and validate this as a trend line instead of just 2 points. Because we're looking at when I drew this. Okay, when I drew this, we have the bottom point and we have this point here. So this isn't a valid trend line. I say that a lot. You get a third point and it holds. Now it's a trend line. Now it's valid and it's probably going to hold an uptrend, and we have to respect it a lot more. So at this point, it's just a rising pivot. And I do think we can possibly come all the way back to scare and test these lows here. That's the whole point of it, would be to test these lows. That's a huge pullback, and that would drag a lot of bears in. It doesn't have to. Really, we can just consolidate in time, triangulate, and continue higher. And now, I do think with this being our last move here, supposedly our last high, if everything works out the way I'm talking, I think that this may also be a three-wave up, three-wave down. I know this looks like an impulse, so I don't think that's the case, but it could be some sort of ending diagonal. Okay, so if waves start to cross each other, that's way in the future. We're gonna have to determine that later on, but right now we're just looking for a pullback. So we have our 1, 2, 3, 4, 5, and just eke out a new high or fill out this wedge, which that seems a little bit more likely, is that we fill out the wedge and just miss new all-time highs and continue lower. Excuse me. All right, so that's from a technical, traditional point of view. We could make it all the way back down to the trend line by Monday or so. The correction shouldn't last much more than 3-4 days. Should be pretty quick. We have a catalyst today with Powell. I don't really care what he says or not. We're looking for a pullback. Okay. Now, putting this on an Elliott wave point of view. Let's do this one. That's still the wrong count. Okay, this is our new count here. I'm going to keep it on the daily just so we can see things a little bit better. Okay. Let me zoom out. Sorry, I'm moving around here. Okay, so we have is possibly how a way to count it, and just to make this a little bit more complicated, because I still think this is a three-wave move up here, and that's why we thought that this would be the end. This would be the end of the correction, but as the market likes to do, it likes to make things a lot more complicated and go against what the herd is doing. So we have our A here, a three-wave move up for A. This is how we're going to count it. Three-wave move down. This, you see, I've counted in the purple. A, B, and then a 1, 2, 3, 4, 5 for C, and that's the larger degree B. And now, whether it's an ending diagonal or an impulse, we're looking for 5 waves up. You say wave 1 is massive. So as long as wave 3 is not the shortest, this could dissipate. It could be a 1, 2, a shorter wave 3, 4, and a shorter wave 5. 5 will have to be shorter than 3 because this wave 1 is so long. Now that with our alternate scenario, if wave 3 is just massive, we'll have to take in consideration that we get new all-time highs. Like I said, I think this high is good. I don't think that's the case, but that's going to be our alternate, is that we go higher. But wave 3 will have to be just extreme. We'll notice it. We'll see what's happening with it. It should grind higher relentlessly, gapping. It should be bigger than wave 1 if we're going to get all-time highs. Okay, with that said, let's go down to 65 just so we can see the near term. We had our time and price here at on the 7th. It is the 9th. It usually comes together in 1 to 2 days, so this is fine. We're looking for today to be the top. We were looking for yesterday to be the top, really. But we eked out today, and we're not holding that top anyway. So we're looking good here. We're waiting for Powell to speak at noon. I think that'll be the catalyst. And our pullback, I usually say 50-60%, but I think we're going to get a deeper pullback. I think with the catalyst, we're gonna come back pretty hard. So I'm looking for a 3-wave move, an A. This B is just here. These are just placeholders. It's not necessarily where it's going to come to. And then I have the 786 out here, and that would really drag people in. The 786, because we have that uptrend line, 786 would be a real scare point where we test the new wedge bottom, and so we have to keep that in mind. So this will be our zone from 420 to 415. Again, we don't have to get there. But I want to keep that in reference. And so if we go down to 65 on the traditional, we're going to start taking profits in this green zone with this in mind, maybe leave some runners. I drew this channel here because I'm matching the two tops with the possible left shoulder. It's just going to be inverse head and shoulder. You have the channel bottom, which would be just a real symmetrical move. So we reverse from here. This would be our symmetrical move, and it comes right to our 50-60% retracement. And you notice that 415 area is right with that trend line, this new trend line that we have here. So this will be our take profit zone. But we're going to keep in mind when we scale into our long positions that we will scale into them all the way down to this point, about 415, depending on how sharp this is. Okay, it could take more time. So, as more time goes, then you have the rising pivot here. Okay. Now, so a couple different things we could look at. There's a bunch of indicators, and again, it's like if we, for some reason, move up even higher, we have some counts here. We put on the counts. 8 does not have to be the top here for the DMARC sequence count. So we're at 8. It can be the top. For us to get a 9, maybe we get an inside day today. Maybe Powell doesn't really affect anything today. Maybe just a slight down day or inside day. But you have the past 4 days that the 9 will be valid. We don't have to get the sequence in. It's not like something that you really bank on. But look at these 9s worked out perfect for the reversals here, with 9 being the lower price. But we did get a little bit lower here, so we had a good bottom. But this was a ABC. I think this is expanding flat, so it clearly this is the bottom, and it eked out a new bottom and return here. But so we could get a 9 count tomorrow if our high is not necessarily good today. The 8 can still be higher than the 9 to get the 9 count. We have 4 days, the 4 days below that we don't get underneath. But if anyway, it's just a reference. It's just a reference point. So yes, technically we can get an inside day or just a slightly down day to get our 9 out here, and then we got our 9 count sequence. Not going to look at too many of the others. We have our reversal signals. Everything's happening the way. Well, we went much higher than what I thought. These days are just eking out new highs. I thought we had our high back here, which we're really close to it. We're barely above it, but we're overbought. Negative divergence on the Williams %R. That is a big time daily sell signal for us. Okay. It works really, really good. Just like this one. Just like these. Daily divergence. All right. And so the MACD, we have positive divergence. We have a bullish cross trying to get into bullish territory. And I think we're just testing back when we get our pullback, and going to continue higher to cycle through this phase here. And the really a huge part of us being bullish in this midterm would be just checking out the weekly. And with the weekly, we have so many. This has to cycle all the way. It doesn't have to. Excuse me. It doesn't have to. But this still has a lot more room to cycle to the upside. The RSI can still go higher. The MACD, it'd be perfect to get a lower high with weekly divergence, with this eking out a new high up here. That would be a perfect sell scenario for much, much lower prices. All right, so that's what I'm looking at on the Qs. Quickly, I'll just go through this. I don't need anything on here. Qs, the same thing. Now again, if we make new highs on the Qs before SPY, we're going to be on guard that it could be a lower high in SPY, because that would still fit market structure well. But we'll be looking for the divergences and, but Qs have to make a new high and may make all-time highs while SPX makes a lower high. So either scenario, Qs, I'm looking for it to lead. They don't both have to make new highs. Just the Qs is signaling this is a correction for sure. For sure. And the reason why I say that is because we have our first leg down. This can't be a 5-wave sequence. It doesn't fit. This third leg is the shortest. It's shorter than 1 and shorter than 5 if this was counted that way. So that's invalidated. So this has to be a corrective move now that we negated and we got above this high here. If we didn't get above this high, I couldn't say for sure that this wasn't a 1, 2, 1, 2, 1, 2 setup for much lower. Now that that's invalidated on SPY and the Qs, we are only left with this being a correction, which we have to get a new high now. Now, I know that I talked about this in the beginning, but I want to reiterate, some people are going to say that we're going to get a lower high and we continue lower, but that's way more bullish than any of my scenarios. I just don't think that fits on what's going on in the world. All right. If that starts to happen, then I have to change my, that's what we do. We're traders. I have to change my opinion. But as of this point, if we get a lower high, there is no super bear case scenario. It can't make new lows. It just doesn't fit that kind of structure. That would be an ABC type correction, where this C would be an impulse. It'd be scary, but that would be it. It'd be just a correction, a bigger correction than this. It's just a bigger correction. Okay, enough harping on that. Those are the reasons why I think we go higher and that we don't directly go lower from here. Let's go ahead with our new count. Sorry, this is a little bit messy because I'm on the higher time frame, but I just want to show we have, I was showing this as an A all the way up here. We could still do that. We can count it any way we want. This could be an A, B, and then again, 5-wave move up for C. I know that first wave is huge. I get that. So this thing may get all-time highs. We might continue higher. It's just, that's my alternate scenario. But I have this counted as an A, B, and then a 1, 2, 3, and a 4, which pulls back to the 3.8, the 38% from this low, which fits perfectly for wave 4. And so that's why I have this counted this way. So this would be A, B, and then we need a 1, 2, 3, 4, and we're looking for wave 5. Now, if this continued straight up from here and we make new highs on both indices, just straight up, that's a big time short. All right, that would be 5 waves up, making that new high. That would fill our scenario as well. I just don't see it. We're getting all the reversal signals right now, and we're at this former 78.6 SPY here. So if we go any bit higher, we have a little bit more resistance. So if we get our pullback right now, as I'm blabbing on, we that would mean the 62% and the 786. That would coincide with the former 62% retracement from the highs. I don't think all-time highs, from the let's see, near-term high. No, that's from all-time highs. Okay, so that's the 62%. So that's a big one. And so that 350 area should hold pretty well, and that should coincide with our new uptrend line as well. Right here. So with this being the new uptrend line, and this being the 450 area right about, yeah, that would be a sharp pullback. You guys, I don't know if it makes it that quick down there. Who knows? Anything can happen. But again, we have our green zone. That's our 50-60% retracement. That's where we'll take profit and start scaling into our longs. And look at our channel here. If we draw at the top to top here. And then the if you want to be symmetrical, this is the left shoulder, head, excuse me, head, and then our right shoulder, which coincides again with that uptrend line. And if it takes more time, it could be a little higher. That'd be our zone. Anyway, so that's what we're looking for. Some people are going to say if we break back down that we broke down, fake break from the flag, and that we're going to go much lower. Now that's just not. I'm not even going to play around with that scenario. Like I said, it doesn't fit. So that's it, you guys. That's what I want to show you. I hope this helps, and we will make a market update later on tonight.